All right, good afternoon. Welcome to the weekly take on the market. Today is Friday, June 16th, 2023. I will be your host. My name is Scott St. Clair. I'm the manager of the Premium Product Group here at Investors Business Daily. Please take a moment to read the disclaimer. I'm not licensed. No one at IBD is licensed. We don't make buy, sell, hold decisions. These webinars and videos are vetted for compliance, so we can speak a little bit more freely, but definitely make your own decisions as far as any stocks or markets that might pop up as we go through here. Okay, so we'll do the market thoughts. I don't have that many screenshots. I think I might have one. Industry groups, stocks to watch, quote of the weeks, same routine, same bat channel. So the only one I have today is this chart of the seasonality, and I've used this before. I think it's a pretty interesting chart. This is for the QQQ. So seasonally, we are in a tiny bit of weakness in this kind of last couple of weeks of June into early July. Then it's like all systems go till September, which is where historically you kind of run into trouble if you do. And then the markets tend to bottom in October. October gets a bad rap, but actually September is probably the worst month. I think it is. I think October is when the market tends to discount the bad news that occurred in September. And then you get the last quarter, which is traditionally very, very good. So, it depends on what type of trader you are. I think the market's, it's okay. I'll talk a little bit about it. For me, it's way stretched. I think the risk reward has been squeezed out of the trade like a lemon, but that's just for me. That's how I trade. I'm looking for, I won't do very well in the wiggles. If Nvidia goes from 430 to 400, it's really done nothing wrong, but it'll wiggle me out in the process. So let's look at the indexes. Pause share, resume share. So here's the NASDAQ, and I've talked about it for weeks and weeks and weeks. If you have to label it, I know some of us don't like to label it. That's fine. I don't like to label it. I don't think it's valuable to put yourself in some kind of box, but this market's is strong. The NASDAQ is super strong. For me, it got a little frothy yesterday. I could see that the market was kind of jumping. I watched the NASDAQ futures a little bit, and it's like 14,300, 14,305, 310, 312. It's just like skipping numbers, or whatever the numbers were. And it just felt a little bit frothy short term. But, I don't know if that means that it's what short-term weakness leads to long-term weakness. So I tweeted that I think you want to be trimming the trees, so to speak. And the trees are anything that you've had grown to the sky. So I drew this kind of trend line like that. And I know it doesn't qualify as a trend line from Bill's book or a channel line. It's not long enough. That's fine. This is all it's a bit of art and a bit of science, and probably a lot of art versus a lot of science. So it just felt a little extended to me, and I could see stocks and like Microsoft and Nvidia and Tesla. They're just stacking on 5, 6, 8, 10-point days over and over, and it's just not sustainable the way I trade. Now, if you can survive the pullback, great. There's like, to me, I think about like a box. There's like a box with 4 outcomes, right? And that's the stocks keep going up without me. And that's a bad outcome, right? If I trim or do some selling. The stocks go sideways, no harm, no foul. I can always get back in 3 weeks, 3 months from now. The stocks go down, but come back. Well, for me, the problem is I don't know if I'll be able to withstand the go down. So this is the box that you have to kind of know yourself as a trader, or they go down and stay down, and that, you have some kind of short, intermediate, or long-term top. So in this scenario, like this, this doesn't hurt me. This doesn't hurt me if I do selling, because even if, let's pretend I get the best tick, comes all the way back down and comes all the way back up, I can just always buy it back there. And then this, of course, is what I'm trying to avoid, because I'm right or wrong, I tend to manage my equity curve versus lumpy returns. And I know lumpy returns are better. Would you rather make, I know Warren Buffett says you'd rather make 15% lumpy than 12% curved. Yes, but the problem is you just don't know where the lumps are coming from, and most people prefer the they say they want the lumpy, but they act accordingly to the smoothing. And so these are three boxes that are I can handle, and then this is the one that kind of gets away from me. But that I just don't find that happens that often. Once in a while, if Nvidia is going to 1,000, there'll be another chance. And I didn't get completely out of it, but there'll be another chance. They don't go in a straight line. They build bases, they pull back to moving averages. They have these scary days that we're not used to. So it'll happen. So I'm short the NASDAQ more as kind of it's not really a hedge, because I'm not a big hedger. I think NASDAQ's going to go down, so I'm short the NASDAQ. But I also have some stocks that I didn't want to get out of. So if I get the short NASDAQ trade wrong, then hopefully the stocks I'm in will offset that a little bit. We'll just have to wait and see. But it's an outright trade. I think it's going to go down. Not a lot. I'm not looking for end of the world, but a couple hundred points in NASDAQ, or actually honestly, to be honest with you, more than that. Even if it went down somewhere here, it would be nothing in this kind of longer term trend, but it would be hard for me to stomach that in some of the Nvidias of the world. And maybe I could the balance of the trade. I don't know. We'll see how it plays out. The S&P, not as stretched as the NASDAQ. I think the QQQs are up 30% plus this year, and we're only, halfway through. So it's been a banner year in NASDAQ land. IWM, nothing. But Japan, like if they're having a great year in Japan, it's up 15% from the quote unquote pivot right there. Some other VPL looks okay. It's the Vanguard Pacific. It's got a little Japan, probably a little bit of everything. That looks fine too. So the jury's out. I think I'm neutral on the market. Let's go back. I remember let's see if we can find, like, where's the banking crisis. So March, and then the undercut was in May. So let's see what the NASDAQ was doing in March. See, this is opportunity, or crisis creates opportunity. That's where I was getting bearish. The NASDAQ didn't want to go down and the world's on fire, allegedly, right? You're getting bad news, banking crisis, banks going away. So there's the undercut, the first kind of shot across the bow on banking. And then the next one was in May, right? Where I pointed to that MCB where an undercut. Well, look what the NASDAQ did. Look at the relative strength compared to that. And I know it's always easier in hindsight, but it's there for you if you put in the work and you're open and you're open-minded to the possibilities. The NASDAQ is just saying, I don't really care about that. I'm stronger, much stronger than those banking stocks. A significant higher low. All right. Let's go to do I have anything else index related? I don't think so. So it should be interesting. We got, and there aren't any kind of big old catalysts. The Fed, maybe there's some 3-letter acronyms coming out in the next few weeks, but you're there's nothing like huge earning seasons, not that close. So I don't have to worry about any of these types of boogeyman that the market might throw at me. Industry groups, computer hardware, peripherals, software. So this is like SMCI, which is kind of getting a little tired. It's another thing. Like, I think it was yesterday at one point, the NASDAQ was really ripping, and I don't remember if Nvidia was, it might have even been red or it was barely up on the day. And these are little clues that the market it gives you. It's like SMCI hasn't been able to go up. We'll look at that one. Let me write that one down. That, these were the leaders. These are the first ones up. Now, maybe they just stop and the money sloshes into other stuff. And in the end, the index goes nowhere. That's a possibility too. It's why you don't want to get all uber bearish. Markets can go up a lot with when there's a lot of exuberance, and the fear and greed index is really high, and the AAII numbers are really high. But remember, I talked about those last week. They're not great timing indicators for tops. They work best the other way for finding bottoms. Internet content, let me pull this up. It doesn't look all that different. Semiconductor, database, building residential is losing a little steam. Maybe we'll look at some of the home builders. So PHM, Lennar, I think made like an all-time high a day or two ago. I don't really watch the home builders that closely because I've missed the trade. I haven't been in those at all. So I think the groups, it's fine. There's nothing negative here. It's not like you see gold and utilities or anything like that. So there's a lot of diversity in growthy areas. So yeah, that's it for, I only had the one slide. So we'll do stocks to watch, and then we'll do the quote of the week. This might actually be a short video. I didn't have a lot to talk about this week, but I've said that before. Well, maybe I'll start getting I'll ramble. Let's go to stocks to watch. Make sure I'm sharing my screen. So let's start with Nvidia. That's the 800-pound gorilla. I'm going to turn off my video, so in case you look, it's off the chart. You can't even see it. The stock hasn't adjusted to the price action. Let me turn off the pattern rec. So this is not a proper pivot. It's too short, but it was 3 weeks tight, and I just knew it was going to come out of this area. I was hopeful that it would come out after another week, but the market just doesn't accommodate me. So I was buying more there, but I'm a seller of anything I bought there has been sold in the last, yesterday. I didn't have any of that today. So I have a modest position in Nvidia. I'm going to try to hold it. This is it. This is where the rubber meets the road for me, because normally I would be a seller of Nvidia. It looks tired. It looks extended. It broke out of a kind of a fake pivot or quasi pivot or a nothing, as Bill would say. It breaks out of a nothing, should be sold. So I fully expect it to come in. I'm almost hopeful that it does, because if it does, then my NASDAQ should come in and I'll get a chance to reposition myself back to a more fuller position. The risk is, think of that box. The risk is that it just, boom, 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 and I'm not going to have a very good position compared to what I had. And that's the risk, but I think the probabilities of that are low. They're not zero though. They're just low. And I actually considered being short AMD against Nvidia. So these things that I'm thinking about. And I did short AMD in this kind of weakness, but in the end, I was like, do I really want to, do this? If I was running like $100 billion hedge fund, that's probably something I would do. I would just be short AMD against Nvidia. I think that might be a good trade, kind of quote unquote risk free. Of course, it's not truly risk free, but you get the idea. I've squashed the market, the industry group risk. I've kind of squashed all that out of there. If there's massive industry group risk, AMD will go down and Nvidia will go down. If there's massive market risk, AMD will go down and Nvidia will go down. If it's just they kind of trade on their own merits, I think Nvidia is the better company, the better chips, and it'll go up. And AMD might go up, but it's not going to go up as much as Nvidia. But that's kind of the trade you'd want to do in some kind of size. So I put that on, but I just didn't have the heart to stay with it. But thinking about how am I going to be able to stay with Nvidia for a potential big move, and maybe it just comes down to Scott, draw a line in the sand, have some guts, and honor your rule and say, I'm not going to sell Nvidia till it breaks X, and everything else between there is noise. I know a lot of people do that and they're good at that. I'm not very good at that. I'm trying to get better, but I'm not very good at that. All right, what else? Tesla's been a monster. I'm tempted to short Tesla, but it's like, okay, well, why, Scott? Why do you want to short Tesla? Well, because it's gone up too many weeks in a row. Is that a really good reason to short it? Obviously not. It's a terrible reason to short it. But it looks extended, and so I think it's a sell. I wouldn't if I was long, and I think it's a sell, but we'll see. But I don't have any desire just yet to short it. I'm sorry. I have the desire to short it just because it was treated me so good in this area. But when I look at it objectively, when I'm honest about it, it doesn't look like a short. So the market was weak yesterday. The market was strong yesterday. The stock was it was unchanged. And that's kind of the little clues I'm looking for. Today, the market was relatively weak. It wasn't terrible. I think it was down maybe 0.5% in the NASDAQ or something. And Tesla was up. So we'll have to wait and see. SMCI I talked about. So this looks very, very tired, very, very frothy. No matter how you draw it, it's way above all the trend lines. I mean, just like, I don't even know how you would even draw anything here. So, but it's super, super leadership. One of the first stocks out, if not the first stock out. So if it's early in the move, the overall cycle of this move, it's like shorting Qualcomm, or selling Qualcomm, or either way, right? Here, right? So Qualcomm goes from 8 to 30. 8 to 30 is a massive move. Think about that. That's what, almost 300%, 275%. So you might think, oh, well, that's it. That's the end of the move, and it rides itself and went up there, and then you get weakness here, and it righted itself, and then you get weakness here, and it righted itself, and so you have to be open to the fact that it's possible it's it's in the third inning of a 9-inning game or something like that. I don't think it's the first inning, but it doesn't. I don't have any thoughts that it's the 8th or 9th inning. I think it might be a little bit early. So, but short term, very, very extended. Now, as for me as a trader, I'm not in SMCI anymore. It's just too, and I didn't handle this very good either. I think I bought it there, or So yeah, don't get me wrong. It's not like I owned it way down here and decided to sell it here. I didn't own it very well, which means I have to be pretty proactive with my sell. So and the market was up yesterday and SMCI was down. And then today the market was down only a little bit and then SMCI was down 5%. So it might be the canary. It's kind of, maybe this leads the market down. It sure led it up. That's for sure. It's probably the best stock. Microsoft, let's look at that. So this is just unusual action for Microsoft. It's up $10, 3%. It's up 3% here. It's up 2 and change. And so it just looks a little much. It just seems like it might need a rest. And you can see how up and then a long rest and up and then a rest and then up and then a rest. Maybe that's what it does. So depending on your style, you probably can just leave it alone. Pulte, let's look at Pulte. The home builders have surprised everybody. I don't know. No, I don't see anything wrong with that. And how about Lennar? Again, another one I don't see anything wrong with. How about GRBK? That was one I was in for half a minute, breaking that trend line. It's not the best buy point. It's very short-term buy point, but acting, they look good. They sure are holding up well. In the energy sector, I did notice CEIX had a really big day yesterday. It was up 9.5%. It's coal. So, how do you feel about coal? But gosh, the last quarter earnings and revenue are so huge and the estimates are tremendous. Not that it's something I look at, but the PE is like 0, so it's trades for nothing, but maybe coming out of a long base, the relative strength is mediocre, pedestrian. But I watch these, well, because I might go with that, but also if there's a shift in the market, like if the market decides to slow down on the AI game, let those consolidate for weeks to months, where does the money go? Maybe it goes into something energy related. I don't know. Energy related hasn't been all that great for a long time. So, but I watch them just for that. VRT, another one I'm trying to hold on to. So this is 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row. And every week I swear this will be the last week. And so I expect some type of pullback. And a lot like Nvidia, I have a modest position. So a position where I'm almost hoping it pulls back because I don't own that much, and I'll get to rebuild the position on weakness / sideways action. This name looks very good to me as far as the whole kind of AI area. If AI has a long runway. Last but not least, it's because it's a 3-time ETF, it's hard to kind of distinguish, but this is the FANG 3-time ETF. And you can see it's up from 36 to 200. Now, just because something's gone up a lot doesn't mean that it can't continue up, but it's up 4.5-fold in 2, 4, 6, 8, 10, 12, 14, 16, 18, 20. In about 24 weeks, it's up 4.5-fold. So you have to be, I think the message is you should be prepared for a potential pullback in the market. It doesn't mean it has to come, but you want to get your ducks in order. You want to know, where are my stops? What type of position do I have? Can I withstand a potential pullback to the moving average? Can I withstand a potential base, a 15, 20, 25% base? I would have my ducks in order for some of these names that have made a big move. And it depends on the type of trader you are too. If you're, I have a friend that he says he's a terrible seller, and I think he's a great holder of stocks. And And he's not really worried about the next 5, 10, 20 points in Tesla because his cushion is so huge. So if you're that type of trader / investor, then you don't have to worry about it. But if you own Nvidia and SMCI and Tesla and Microsoft and VRT and if you own all these, you're doing awesome. You need to have a game plan. Am I going to try to ride the wave? Am I going to risk some downside to turn this into a monster year? And be honest with yourself, because the last thing you want to do is turn a great year into a nothing. But I think to have a monster year, you need to be willing to risk some off the top. So if I'm up 50, 60%, I might be willing to say, okay, my line in the sand is 40%. I'm just gonna, if you had told me before the year was up, I'm gonna make 40%, I'd have done cartwheels for that. Well, I'm up 60. I'm going to try to make 100. And worst case, I'm going to be out at plus 40, something like that. And then, that's my game plan, and then honor it and honor it. So if the pullback is severe, you 60, 55, 45, 42, you need to start trimming and trimming and trimming. I remember Scott O'Neill telling a story about that, how he was doing that. He was up big, and then all of a sudden it just felt like he was losing 3-4% a day and just giving back gains. And he's like, the alarm bells started going off on how fast he was giving back the big year. So he turned a monster year into a great year. Well, because he was trying to create an incredibly monstrous year. So that's the main thing, is have a plan. I guess always have a plan. Are there any other stocks? Let me turn my camera back on. I don't think there are any other stocks I want to talk about. I wrote the ones down that I wanted to mention. All right, so the quote of the week is from Edward Allen Topol, Zen in the Markets. This is a really good book, Zen in the Markets. It's probably 30 years old. I bet it was written in the 80s. He worked on the CBOE, I believe. Probably should have looked before I did this, but copyright 1992. So it's 28, 20 or 31 plus years old. Super easy read. You can finish this in about half a day. It's but very profound. One of my favorite books. I've probably read it 50 times because it's super easy to read, and there's a lot of wisdom in this little book. And this is where I got my Twitter handle, was I just from this book, Zen in the Markets. And so he's not the first to say it, but a lot of people would rather be right than make money. So I tweeted yesterday about the market, and I was very reluctant to tweet about the market. Like, I created the tweet and it just sat there in my draft for maybe 40 minutes. I just couldn't hit the send button, because I worry if by putting something out there into the universe where I think the market's a little tired and should be, trimmed. If you're in the market, at worst, you should do some trimming. Then I might be married to it. And so then I can't, well, how can I change my mind? I told everybody the market should be trimmed here. So I worry about that a little bit, but mostly I'm very focused on just making money. I don't want that tweet to be, well, look at me, look how, let's pretend that tomorrow or yesterday was the high of the market for 6 weeks or 6 months. That's not going to put any money in my pocket. That's gobbledygook to me. So if I execute a trade and make some money, that's most important to me. So I just want to make money, and that doesn't mean that I don't lose or I'm unwilling to lose. I think that you win by losing. Another great book. I have so many books. but it's called The Best Loser Wins. I believe it's called The Best Loser Wins. That's another great title of a book. But you win by losing a little. So just make money. Just let the market breathe in, breathe out, follow along. You don't need to be right to make money. You can just follow along with the market. And if you want something to read, I would, I like this book. Okay, Marcus Smith at investors.com, 800-424-9033. I think this might be one of the shortest videos I've done in a while, which is good. There just isn't that much different from last week. Next week is the 20. Yes, the last week in June, I'll be on vacation, so there will not be a take on the market. So I'll do one more for June, and then we'll be into July, and let's see what the market brings us. Have a great weekend, everybody. Bye-bye.